Safety Manager. From Zero to Expert by Dmitry Borovoy. Claims: How to Run Insurance Claims Without Bleeding Money. Chapter 16. Claims: How to Run Insurance Claims Without Bleeding Money. Claims are the biggest money and most nerve-wracking part of safety work. One incident, tens of thousands of dollars on the line, correspondence dragging for months, 3 insurance companies running in parallel. In this chapter, you'll see how the process works from the inside, how to build the file, how to talk to the adjuster, how to close the case so the company comes out with minimum losses. We'll walk through 3 typical cases: a rolled truck with a beverage load, $100,000, drywall ruined under snow, and a scratched step in a parking lot for $10,000. 16.1. What a claim is and where it comes from. A claim, an insurance claim, is when someone comes to you with a document and says, "There was a loss. Your company is going to cover it." That's it. No fancy wrapping. It's a demand for money. In trucking, losses are a given. Things break, things tip over, things get wet, things don't arrive. The industry knows this. That's why insurance exists. But insurance doesn't run itself. Between the accident and the money, there's a process, documents, correspondence, evidence, deadlines, and the main person in that process is you. The 3 types of claims you'll actually see. 1. Cargo claim, on the freight. Cargo is damaged, spoiled, missing, paid by cargo insurance. 2. Liability claim, general auto, third-party damage. The driver hits someone else's vehicle, property, or person, paid by liability insurance. 3. Physical damage claim, on your own truck or trailer, your asset, your insurance, paid by physical damage insurance. One incident usually spawns more than one claim. A truck rolled with a load. You open 3 files: cargo, physical on the truck, physical on the trailer. And often these are 3 different insurance companies because fleet owners deliberately split risk across different policies. It's cheaper that way. Pause. The thought right now, the company is going to lose $100,000, and it's because of me. Stop it. I know that thought. Every safety manager has it on their first big case. A claim is not your loss. The company pays insurance premiums every month, precisely so that in moments like this, the hit lands on the insurer, not on the company's budget. Your job isn't to save money out of thin air. It's to run the process cleanly, gather documents, hand them to the adjuster, answer requests, keep the paper trail, do it right, and the insurance pays. Get denied, still not a tragedy. It's a predictable outcome, and usually you can see from early on what ground the denial is going to grow out of. Moving on, your broker agent is your first call. First reflex is to call the insurance company direct. Wrong move. The right first contact is your insurance broker agent, the person or firm the policy was written through. They know your history, your fleet, your driver. Often they'll open the claim for you and handle the back and forth on your side. They're your representative, not a clerk of the insurance company. Important. Under the policy terms, you are required to notify the insurance company of claims within a reasonable time frame. If you try to handle it yourself on the quiet, you're breaching the contract, and eventually that costs you the policy. But if the damage is minor and the at-fault party is ready to settle on the spot, better to keep the insurance out of it. Every claim on record raises your premium at the next renewal. More on that in a couple of paragraphs. Deductible. Your piece of the hit. Deductible is the amount the owner pays before the insurance kicks in. Policy with a $2,500 deductible on physical damage, a $10,000 repair. You pay $2,500. The insurance pays $7,500. Simple rule. Higher deductible, lower monthly premium. Fleets with cash on hand set deductibles at $5,000, $10,000, save on premiums, and handle small stuff themselves without touching a claim. Loss control. Protection before the accident, not after. The cheapest claim is the one that never happened. Larger insurers have loss control departments, and they actually help you build protective processes into your operation. Regular driver training. Bonuses for safe driving. Consequences for violations. DVIR and fleet condition oversight. Pattern analysis. Is one driver pulling a string of claims? Is one lane producing repeat incidents? That's a signal. Everything you did in chapters 415, DQ files, HOS, inspections, training, this is claims work. Done in advance. 16.2. Claim lifecycle. 5 stages. Every claim, whether it's $3,000 or $3 million, runs through the same 5 stages. Stage 1. Incident and initial analysis. Something happened. A call from the driver, an email from the broker, an incoming message from another company's insurer. Your job, get the scale, lock down the facts, loop in the owner. Stage 2. Opening the claim. Notify your insurance, through the agent or direct. You get a claim number and the name of the adjuster, the insurance company's person running the file. Stage 3. The file. Assemble the document package, photos, police report, CDL, registrations, rate confirmation, BOL. Stage 4. Correspondence with the adjuster. The long phase. Questions, answers, follow-up requests, driver statement, weeks, sometimes months. Stage 5. Closing. The file closes one of 3 ways. The insurance pays, the insurance denies, denial letter, or the parties can't agree, and it goes to court. At the end, a letter of closed claim. That document goes in the folder. Timelines run from 10 days on a simple case to several years on a hard one. That's normal. 16.3. Stages 1-2. Analysis and opening the claim. Case 1. The rolled truck. Typical scenario, driver Ivan is running a delivery to New Jersey. Weather is working weather, visibility clean, road straight. A hard gust of wind, truck drifts out of the lane, gets turned, lays over on its side. Driver is fine, not a scratch. Truck, total damage. Trailer, heavy damage. Cargo inside, wiped out. Truck and trailer alone run up to $100,000. Here's how safety works the first few hours. Step 1. Pull information out of the driver. The driver is in shock. Don't push, don't blame, don't panic yourself. Alive? Injuries? Need a medic? Where exactly? State, highway, mile marker. What time? What happened? In his words. Police on scene? DOT inspector? Other parties in the crash? Any? Step 2. Lock down evidence while it still exists. Photos. A lot of them. Different angles. The truck, the trailer, the cargo, the road, the markings, the weather, other parties, if any. Whatever the driver can physically shoot, he shoots. Dashcam footage. If samsara, motive, or similar is installed, try to pull the last 15-20 minutes. Typical trap. On a serious impact, the truck loses server connection and the video doesn't make it to the cloud. Then the only path is sending the physical unit back to the provider for data extraction. It's expensive and slow, but it works. I've seen this many times. Crash/incident number. If police showed up, they have a case number. The driver has to get it and hand it to you. In 1 to 2 weeks, you request the full police report from the same department. Contacts of other parties. If other vehicles were involved, the driver has to get name, phone, company, insurance, DOT number, license number, on scene, not later. Step 3. Log it on your end. Entry in the accident register, see Chapter 15. New folder in Google Drive. Claim Ivan Petrov, 03/15/2025. Everything that comes in, photos, documents, email, goes in there. Step 4. Talk to the owner before opening the claim. This matters. Don't open the claim right away. Talk to the owner first. There are situations where it's better not to open a claim. The at-fault party is ready to pay on the spot, and the damage is small. The damage is below the deductible. Pointless to open. Insurance won't pay anyway. There are elements of the situation that almost guarantee a denial. In that case, build the full file first, then open, not the other way around. Every claim on record pushes up the next renewal. At renewal, the insurance looks at loss history, and each entry hits the premium, not just on that truck, but on the whole fleet. Sometimes paying $3,000 cash is cheaper than paying elevated premiums for 3 years. For owners, Track A, owner. You are the owner, but that's not a reason to decide on emotion. 30-minute pause. Run the math on paper. Damage amount versus deductible versus premium increase versus the risk that the other side opens a claim from their end anyway. Often the answer is still, open it through the broker. But you have to do the math. For staff safety managers, Track B, employed safety. Your job is to bring facts and a recommendation. The money decision belongs to the owner, not you. Always in writing, in email. Here's the situation. Options A, B, C. My recommendation B. Confirm. That covers you later. Step 5. Open the claim, if that's the decision. Your company has a document called Claim Reporting Procedures, issued by the insurance company at policy binding or renewal. 1 page. Who to call, who to email. Auto liability, phone, email, policy number. General liability, phone, email, policy number. Cargo, often a separate company, separate department. Physical damage, its own contacts. Print it and keep it within reach. In a crisis, you're not going to be hunting for that PDF. First email, template, subject, new claim, policy number XXX, date. Please open a new claim under policy XXX. Date, state, time, driver, name, brief description. Due to weather conditions, the driver lost control and the truck overturned. No third parties involved. Photos attached. Please advise on adjuster assignment. Best regards, name, safety manager, company. Don't dump the whole folder at once. Basic info, and that's enough. The adjuster will ask for what they need. Typical first request: what was the cargo, trailer year, make, VIN, rate confirmation, who owned the product, and you send it, piece by piece. Reverse scenario, a claim against you. It also happens the other way. You didn't open anything, and an email lands in your inbox from your own insurance company. A claim has been filed against your company by such and such. Materials attached. We need a driver statement. That's when the broker or shipper opened a file on their end. Their insurance contacted yours, and you find out after the fact. The process is the same. Analysis, file, responses. The starting point is just an incoming email instead of your own call. 16.4, Stage 3, the file. What to actually collect. The file is your main argument. Everything the adjuster decides, pay or not pay, will be based on what you sent. The more complete and clean it is, the faster the file closes and the higher your chance of a payout. Checklist. Base package. Any claim folder, claim, driver, date in Google Drive. 1. Scene photos, lots, different angles. 2. Police report, arrives in 1 to 2 weeks. Incident/crash number locked in immediately. 3. Driver's CDL, scan of both sides, expiration. 4. Medical card, scan. 5. Truck registration, current. 6. Trailer registration, current. 7. Proof of insurance, confirmation that at the moment of the incident, the driver, truck, and trailer were all on the policy. 8. Lease or rent agreement, if anything is leased or rented. Checklist, additional, cargo claim. 9. Rate confirmation, broker's document, load, route, rate, special requirements, like tarps required. 10. Bill of lading, confirms loading, receipt, cargo condition at origin. 11. Broker and shipper contacts. 12. Towing/recovery, invoice. Recovering a rolled truck with cargo easily adds about $30,000 on top. Brace for it. 13. Cargo disposal certificate. If the cargo is destroyed, runs about $3,000, and you can't file it without written consent from the cargo owner. You cannot just throw cargo out. Checklist. Additional, physical damage claim. 14. Estimate or invoice from the body shop. 15. Appraisal, damage assessment by the insurance company's appraiser. Checklist. Additional, liability claim. 16. Third-party data, who got hit, their insurance, their damage. 17. Driver statement, written statement from the driver. What this looks like in Case 1, the rolled truck. 1 incident, 3 parallel claims in 3 different insurance companies. Cargo claim, Insurer A, on the freight. Physical damage on the truck, Insurer B, total damage. Physical damage on the trailer, Insurer C, damage. No general liability, no third parties hurt. Rule, no injured third parties, no liability claim. Each insurer gets its own package, its own first email, its own adjuster. The drive folder grows subfolders. This is normal working mode. Get used to running multiple files in parallel. If building the file feels scary, first, don't do it all in one day. In chunks. Today, photos and statement. Tomorrow, registrations. Police report next week. Next, checklist right in the folder. File checklist.md. Mark what's done, what's in progress, what's pending. First question is always the same. Were the driver, truck, trailer on the policy at the moment of the incident? If not, the insurance denies, and the rest of the collection is pointless. Check this first. Ask the adjuster. He's a human. This is my first cargo claim. What format works better for you? A zip or separate files? They'll answer. That's not weakness, that's saving time. Stage 4. Working with the adjuster and storing documents. Who the adjuster is and whose side they're on. The adjuster is an insurance company employee running your claim. They gather data, assess and decide, pay, don't pay, how much. Keep this in your head from minute 1. The adjuster is formally neutral, but in practice works in the insurance company's interest. Not an enemy, but not an ally. Their goal is to minimize the payout. Yours is to justify the maximum. That's why the file decides everything. Correspondence rules. Rule 1. Email, not phone. If the adjuster calls, fine, talk. But after, always follow up in writing, confirming our call. I'll send X by such and such date. You'll respond by such and such. A verbal agreement without confirmation didn't happen. Rule 2. Answer fast. The adjuster has dozens of files running in parallel. Go silent for 2 weeks, they get annoyed, and close the file not in your favor. I've seen emails in all caps. That's literally, I'm tired of waiting. Rule 3. Give only what was asked for. First email, minimum. After that, by request. No reason to hand over material that can be flipped against you. Rule 4. Prep the driver's statement in advance. The adjuster almost always wants to talk to the driver or get a written statement. If the driver admits fault, there may not even be a conversation. If he doesn't, there will be calls and questions. Prep the driver. Clean wording. No emotion. No guesses. No I thought maybe. Case 2. Drywall under snow. Another typical scenario. Driver, owner, operator. Running California to Minnesota. Cargo, drywall. The rate confirmation spells it out in black and white. Tarps required. Broker confirms in messages. Dispatcher texts the driver 5 times. Don't forget the tarp. At pickup, some warehouse worker says, you don't have to cover it. The driver believes him and rolls without a tarp. January, snow, slush. Drywall soaks up water like a sponge. In Minnesota, the load is trash. Brokerage opens a claim for $10,669.18. Safeties work. 1. Got email and photos from the broker. 2. Reached out to the driver. The warehouse guy told me. 3. Forwarded the whole package to cargo insurance. 4. Insurance assigned an adjuster. Adjuster talked to the driver. 5. 6 days later, claim closed. No payout. Why? Rate confirmation required tarps. Dispatch correspondence required tarps. The driver knowingly ignored it. That's not an insured event, that's negligence. Result: $10,000 out of the owner-operator's pocket. If he refuses, the insurance may go to court, or the broker will sue. Why I'm walking through this case? This is a typical cause of denial. Violating rate confirmation instructions. HOS violation at the time of the accident. Driver, truck, trailer not on the policy. Intentional acts or gross negligence. All 4 are rock-solid denials. Memorize them. Document retention. Keep everything. Main rule, don't delete anything. Ever. Not a single email. The claim folder has to contain first notice, your email or the incoming one. All correspondence with the adjuster. Every email. In order. Everything you sent the adjuster. Everything the adjuster sent you. Appraisals, invoices, photos. Driver statement if there was one. Police report. Summary of each phone call, emailed. Letter of closed claim, the final document. Where to store? 1. In work email. Delete nothing. This is your main archive. 2. In Google Drive or safety software, Pro Transport and similar, a structured copy. 3. Backup. Serious fleets do a monthly backup to an external drive. Why this matters? Claims resurface in 6 months, a year, 3 years, especially in litigation. At renewal, the insurance asks for loss history. On a safety audit or compliance review, DOT may pull the file. A driver quits and files a lawsuit a year later. You need the full correspondence. Retention period, at least 5 years after closing. Liability with injuries or fatalities, forever, as long as the company exists. 16.6. Stage 5. Closing the claim. Until there's a letter of closed claim, the file is formally open, and it can wake up half a year later. Closure isn't a formality, it's real protection. 3 scenarios. Scenario 1. The insurance pays. The adjuster decides to pay. Money goes out, to you, to the injured party, or to the repair shop. You get the letter of closed claim and a copy of the payment confirmation. Scenario 2. Denial. You get a denial letter with reasoning. This isn't the end. You can appeal through the broker agent, gather additional evidence and try to reopen. Bring in an attorney. But more often it goes like this. The owner pays out of pocket, or the owner-operator pays, if he was at fault, or the injured party goes through their own insurance. Scenario 3. Court. The parties can't agree on the amount. The insurance makes a final offer. It gets rejected. The adjuster writes, "We're closing our file," and the matter heads to court. Case 3. The step for $10,000. Small but instructive. A typical composite scenario. A driver parks in a lot, clips the neighboring truck. Fuel tank, part of the step, a scratch on the body. Nothing serious. The neighbor's owner doesn't want to settle. Opens a claim for $10,000 through his insurance. Roughly double the real damage. Your insurance's adjuster does an appraisal. Actual damage about $5,000, no more. The other party doesn't agree, demands $10K. You offered to settle direct for $3,000, $4,000, refused. Went through the insurance. Your insurance makes a final offer at the appraised amount. Adjuster sets a response deadline. Silence past the date counts as a rejection. The other party goes silent. Adjuster closes the file in writing. There will be no further offers, and the injured party's remaining options are his own carrier or a lawsuit. You get a letter of closed claim and drop it in the folder. On your side, done. From here, it's the injured party's problem and his insurance's problem, not yours. Letter of closed claim, the final document. A letter from the adjuster stating plainly, claim number XXX closed. Final disposition, paid, denied, transferred. Doesn't matter how it closed, win or loss. The document belongs in the folder. Only with it can you officially tell the owner, case closed, we can breathe. Without the letter of closed claim, the file is formally open. 6 months later, a demand for payment shows up, and you've got no defensive position. Push the closure all the way through. After closing, 1. Report the result to the owner, in writing, not verbally. 2. Tell the driver if it affects him, e.g. an owner-operator paying out of pocket. 3. Mark the folder, closed, date. 4. Log the result in the company's loss log, useful at renewal. 5. If a systemic gap shows up, drivers regularly don't tarp, one lane produces a string of incidents, write recommendations to the owner for prevention. Rules that will save you years. 10 rookie mistakes. 1. Try to settle on the spot without the insurance, and 3 months later the injured party's lawyer shows up. No signed waiver release, open the claim. 2. Open a claim for every scratch. The other extreme. Damage below deductible, don't open. 3. Send the adjuster the whole file in one email. Extra material equals ammo for denial. Give it by request. 4. Don't check the policy as of the incident date. Driver, truck, trailer wasn't added, instant denial. Check this in the first hour. 5. Don't preserve correspondence. 2 years later, nothing can be reconstructed. 6. Don't confirm verbal with writing. Adjuster said it, a month later doesn't remember. 7. Slow responses. Adjuster loses patience, closes the file against you. 8. Don't inform the owner. Owner finds out about $100,000 in losses 6 months later. That ends a safety manager's career. 9. Settle with the injured party behind the insurance's back. Contract violation, risk of losing the policy. 10. Don't get the letter of closed claim. File is kind of closed. Formally, it's not. Checklist. Checklist. First 24 hours. Driver okay? If injuries, medical attention. Time, place, state, circumstances recorded. Maximum photos and video pulled from the driver. Incident/crash number from police logged. Contacts of all parties at the scene captured. Verified driver, truck, and trailer were on the policy. Attempted to pull dashcam video while there's still a chance. Google Drive folder created. Entry in accident register. Owner in the loop, short facts, no panic. Claim types identified, cargo, liability, physical. Insurance companies identified, may be different. Plan for opening claims agreed with the owner. First email sent to broker, agent, or insurance. Checklist running the claim. Number 1. Claim number and adjuster contacts received. Base file assembled, 8 items from 16.4. Adjuster requests closed within 24-48 hours. Verbal conversations confirmed by email. Driver statement ready and aligned with the driver. Owner gets a status once a week. Correspondence preserved in email plus drive. Checklist closing the claim. Letter of closed claim received. Folder marked close date. Owner notified in writing. Result in the loss log. Mini analysis. What could have been done differently? Systemic takeaways. Key takeaway. Chapter 16 Takeaway 1. A claim is a demand for compensation for a loss. 3 types: cargo, liability, general auto, physical damage. One incident equals several parallel claims across different insurance companies. 2. First contact, the broker agent, not the insurance company direct. 3. Deductible is the owner's share. Higher deductible, lower premium. Damage below deductible, don't file. 4. 5 stages: analysis, opening, file, correspondence, closing. Timelines, 10 days to years. 5. At the analysis stage, photos, video, police report, talk to the driver, check the policy, talk to the owner. Don't rush to open, do the math first. 6. File, 8 base documents plus type-specific extras. Critical, rate confirmation, BOL, registrations, CDL, proof of insurance. 7. The adjuster works for the insurance company. Email only, fast responses, verbal confirmed in writing, nothing extra. 8. Document retention, keep everything for at least 5 years. Don't delete email. Drive plus email archive. 9. Reasons for denial, violation of rate confirmation, not on policy, HOS violation, intentional acts. 10. The file is closed only with a letter of closed claim. Without it, it's open, even if it feels done. You've got Chapter 16 if you can explain the difference between cargo, liability, and physical damage claims. You understand what a deductible is and how it affects the decision to open a claim. You know who the adjuster is and whose side they're really on. You can list the 5 stages of the claim lifecycle. You know the 8 base file documents. You understand why owner first, claim second. You know what a letter of closed claim is and why without it, the file is open. You understand that correspondence and documents are kept for at least 5 years. You're ready to run your first claim knowing it's weeks and months, not a day. Claims are expensive. Badly run claims are more expensive. One sloppily closed claim is tens of thousands of dollars in premium increases over the next 3 years. If your company doesn't have a claims process in place yet, put one in now, not after the first heavy case. When you need a consult on a specific situation, or hands on deck to run several heavy files in parallel. Trucker Navi works with adjusters at dozens of insurance companies every day. We've seen denials for every possible reason, and we know how to write a first notice that gives you the best shot at a payout. 315-871-0833. WhatsApp +1 929 347 4410. truckernavi.com. Email data@truckernavi.com. That was a chapter from Safety Manager from Zero to Expert by Dmitry Borovoy, founder of Trucker Navi. The full book is on Amazon. The companion page is at truckernavi.com/en/book.